Hey everyone, welcome back to my channel once again. And we have a pretty bad news for the equity and the stock market. So at the time of recording this video, which is 13th of October, 6 p.m., but the news of course was out as soon as the market opened up. And we have the CPI numbers for September, and they don't look so nice, which I have been talking since my very first videos, because the hawkish plan of Fed is actually not that hawkish. So we can see that the consumer price index rose by 8.2% in the year to September, another stubbornly high result driven by more costly food, rent, and other items. And inflation came in much faster than expected. Bad news for the Fed. Takeaways from another painful inflation report. Disappointing inflation data keeps Democrats on defense ahead of midterm elections. So these are few of the after effects, or let's say the side effects of high consumer price index numbers. And this is, guys, not normal at all. This is really not normal. And this is actually worse than what we think, because now those retail investors out there who were, let's say, not so practical and still had her hope that Fed might consider to raise the interest rates at a lower pace are crushed. Yeah, with these inflation numbers, Fed would really have to be practical and hawkish, really. And now that's why they are saying that there's literally no one in the market left who believes that the Fed can raise the rates by anything less than 75 basis points in the November meeting. So this is going to happen, and we will have a fifth consecutive 0.75% hike, guys. 0.75% hike, and this is crazy. This is crazy, and this is needed, and still it is low. This is still not that high to fight such inflation, guys, really. And this is what I have been saying again and again and again, really. The composition of the inflation reading is perhaps even more worrisome, yeah, than the overall number. Increases in the shelter and medical care indices, the stickiest segments of the CPI basket, and this confirms that the price pressures are extremely stubborn and will not go down without a Fed fight. And this is what is worrisome, guys, and this is what I've been saying again and again since months, that what Fed is doing is really not practical. Of course, they have to find a way also to please the investors, to please the public, and they cannot really just go blunt. But trust me, now public is not that stupid, and they really have to control this, and they really have to fight back to fight this inflation rate, because this is not going to slow down that easy. And this is one of the reasons why I wanted to just update you guys and make a video on this, a short update video on this, because I really do think that people should focus on the investments which they think might be good in long term. And for my European audiences, for my European investors, we can see that Europe is also in a really bad shape. Yeah, the CPI numbers are crazy in Europe as well. As you can see, in August it was around 9.1%. But in Europe, there is a bit of a different scenario. Yeah, the factors affecting the core inflation, the factors behind the core inflation in US and in Europe are a bit different. So in Europe, the CPI numbers, or the core inflation, is rising because of the housing, electricity, and gas prices. And we know why it's happening: because of the war. And Germany has shut down the line, and the same things are affecting the other countries as well. So this is one of the biggest reason what is why the CPI numbers are high in Germany or in Europe and as a whole. And this is actually also the point of worry. Yeah. So basically, everything which is increasing with every single percent of CPI going on the higher end, it will affect the equity market. Yeah. So that's why these things are important to consider. And honestly, guys, these factor will always be there. So there will always be something in the market to be worried about, but an honest and a consistent investor will eventually win. So focus on those companies who you really think will survive, will weather this storm, even if the interest rates are at the higher end. Those companies with positive cash flows, and positive cash flows because those companies can put back their cash flows back into the business to grow, and not depend on the financing, outsource financing, or financing from banks or something when the interest rates are pretty high, because then they would have to pay back at a high interest rates, and that would actually be really problematic, because then the balance sheets become worse and worse. So this is not what we want. We should focus on the businesses who are positive cash flow, or at least the businesses which don't have huge debt from the past, so that they can actually take new debts. Yeah. So you have to think about many other things, and that's it. So all the investors out there, they should literally increase the span of their investment now. This is the time. This is the time also to start investing, because the market is down. Yeah. And this is the time to also do some shopping. And if you guys don't have money, then just don't open any of your brokers. Just relax and do something else, because you would definitely not like your portfolio if you cannot digest such volatility. Because I don't think anyone in the market, anyone out there, has a portfolio which is super green right now. It's impossible with this particular condition. So basically, I see this as an opportunity, but I also see this as an opportunity for good businesses only. The bad businesses might not survive such high interest rates, and who are just literally surviving and expanding their businesses based on outsource financing. And for the beginners who really don't know how to pick up stocks, and don't have the knowledge to see all these financials, and don't want to get into all this trouble to see quarterly results and stuff like that, then guys, just buy some ETFs like S&P 500, all the all world ETF, and you'll be set, I guess, I'm sure. So that's it, guys. This is not any financial advice. This is just my personal opinion, and that's all I wanted to cover. And this was just a short update on the CPI numbers from US and from Europe. And I will see you in the next one. Until then, stay safe, stay healthy, and ciao.